Why is China heading to a breakdown? China's rapid economic decline has been making the headlines recently. But what is happening? Why did China's economy go from world's fastest to nearest collapse in 5 years? How bad will the fastest growing be? In this video, we will look at how China got here and where it went from here. The reasons behind China's economic slowdown and instability are complex, but understanding them provides valuable insight into the country's geopolitical future and impact on regional security and the country's geopolitical future constipation patterns over the next decade. Hey there folks, welcome back to Econify. If you're new to this channel, just hit like on our videos and subscribe to get more incredible content. So today, we'll see how the Chinese economy has fared in recent times and how unpleasant things are becoming for them. Don't forget to comment on this video and be sure to watch this all the way till the end. So guys, let's move on. As China's economy continues to slow, it seems increasingly likely that the country will have to deal not only with the fallout of trade war with the US, but also its internal economic problems. While nobody is exactly sure what will happen to China, there are signs that an economic crisis may be brewing in the world's second largest economy. No other economy in history has grown this quickly. The US market of roughly 60 years was pretty much essential part of what helped China shift from a poor developing nation to the world's second largest economy over such a short period. Still, today has been the focus of global investors who have poured huge amounts of capital into the country's stock markets and real estate. Now, cracks are beginning to slow in China's economic foundation, with the country facing its slowest economic growth in 20 years and potential political changes on the horizon. China is on the verge of collapse. Why? China might be the second largest economy in the world, so what exactly is happening there? Why are experts so worried about China's financial state? Due to its rigid one-child policy and decades of mass migration, China's working age population will drop precipitously over the next 20 years, going from 990 million in 2010 to 842 million in 2030. According to the US Census Bureau, an astonishing 20% reduction in just over 20 years. This is going to have a profound effect on China's economy, social structure, and politics, profoundly be forced to shift from an export-based economy to one that relies more heavily on domestic consumption. There is not an indication that things are about to improve anytime soon. The country's debt levels are some of the highest in the world, and many believe that China will be unable to sustain its growth rate without issuing more debt, which could create economic instability. With China leading global growth in recent years, such a downturn would have serious implications for countries around the world. The Shanghai Stock Exchange lost 30% of its value between mid-June and early July far back in 2015. And a lot of analysts fear that it should repeat itself, the entire Chinese economy will crumble. Now that's because the equality market continues as a leading indicator for wealth activity in China. The CSI 300 index in China dropped 1.6 by the session's end, while the yuan hit a new multi-year low versus the dollar, all of which contributed to a general slide in European stocks. Now China seems to be in a pretty much serious danger as a result of both its central bank tightening and the zero-COVID policy it has adopted. Well, you'll remember that China has delayed, without explanation, the publication of its growth and industrial output data for the third quarter, which were originally scheduled earlier, and in comparison to the same period a year earlier, when economic growth was 4.9%, analysts now believe it has slowed to a 3.3% and new 30-year low. Astonishing! However, investors are now quite apprehensive that the world's second largest economy may have fared even worse than those predictions, which is why the fact that China has postponed the release of the data does not look good. Gold is an essential financial commodity, and its biggest buyers are the Chinese and the Indian economies. If China is struggling economically, that spells bad news for the physical demand for gold. The coming of China's global slowdown. It has been said that China's economic slowdown will affect other countries, but not in the short term. The UK and Europe will be affected in the long term as the short-term export destination for China involved. But that doesn't mean China's economy will collapse. It means there will be a considerable slowdown that will take place over time. Well, to summarize it, these reasons are why China is heading towards an economic breakdown. There is growing discontent among workers toward the widening gap between workers they also show dissatisfaction with wages and job security. In addition, there have been increasing reports of strikes and protests by factory workers throughout the country. China's corporate debt levels have reached new heights, requiring government spending every year to maintain current levels. The main point being here is that these issues may not cause a complete collapse of the Chinese economy, but they may certainly lead to a significant slowing down if no changes are made. But how bad will it be? Well, the country has been experiencing an unprecedented downturn, and China's economic growth rate falling from 9.6% in 2010 to 7.2%